Plug Power Inc. stock shares rallied more than 11% Tuesday, topping $70, after the hydrogen fuel company said it raised its gross billings estimates for this year. Plug Power earlier Tuesday raised its guidance for 2021 gross billings to $475 million, from $450 million. The hydrogen fuel company also raised 2024 gross billings target by more than 40% to $1.7 billion. The stock gave back some of these gains in the extended session, however, down 5% after announcing a $1.5 billion share offering, plus $225 million in an option to purchase to sole underwriter Morgan Stanley. The company said it intends to use the net proceeds from the offering for working capital and other general corporate purposes. Shares of Plug Power, which makes hydrogen fuel cell packs to power warehousing equipment such as forklifts and other products such as backup fuel cell stationary power and backup power, have gained more than 1,730% in the past 12 months, compared with gains around 17% for the S&P 500 index. Analyst Jeffrey Osborne with Cowen late Tuesday raised his price target on Plug Power stock to $82 from $73.50, saying that the increased goals highlight the sizable opportunity for Plug's business as hydrogen use cases proliferate. Plug Power has recently also announced deals with South Korea's SK Group and French automotive company Renault that have helped boost shares. The company is having a conference call today to detail the business update, which should expand on the previously announced agreements. The agreement with SK Group will give the South Korean company a 10% stake in Plug Power with a $1.5 billion investment. Separately, the company and the French automaker announced the intention to create a 50-50 joint venture to integrate Plug Power's fuel cell technology into commercial vans in Europe. The 12 analysts offering 12-month price forecasts for Plug Power Inc. have a median target of $62.50, with a high estimate of $88 and a low estimate of $21. The median estimate represents a minus 14.55% decrease from the last price of $73.14. Apple stock rallies toward another record after Wedbush analysts boosts target to street high. Shares of Apple Inc. surged 2.3% toward record territory in pre-market trading Monday, putting them on track for a fifth straight gain, after Wedbush analyst Dan Ives said he expects the technology behemoth to report eye-popping iPhone unit results later this week. Ahead of Apple's fiscal first quarter results, scheduled to be released after Wednesday's close, Ives raised his price target to $175 from $160 while reiterating his long-time outperform rating. The new target, which implies a 26% gain off of Friday's record close of $139.07, is now the highest among the 41 analysts surveyed by FactSet. Based on our Asia supply chain checks, we strongly believe the iPhone 12 supercycle hype has become a reality, with this week giving the street its first glimpse of underlying iPhone 12 demand and key commentary from CEO Tim Cook looking ahead into the next few quarters, Ives wrote in a note to clients. With more order activity kicking in over the last few months for iPhone 12, our reads are very bullish for the March-June quarters and give us incremental confidence in our supercycle thesis on iPhone 12. The stock has climbed 20.9% over the past 3 months through Friday, while the Dow Jones Industrial Average has gained 9.4%. The 38 analysts offering 12-month price forecasts for Apple Inc. have a median target of $140, with a high estimate of $175 and a low estimate of $74.10. The median estimate represents a minus 2.23% decrease from the last price of $143.19. Microsoft hits $40 billion in quarterly sales for first time, reports record earnings. Microsoft shares increase from record close after easily beating expectations for the holiday period. Microsoft Corp. Blew away earnings expectations Tuesday as it surpassed $40 billion in sales and $15 billion in profit in a quarter for the first time, sending shares up from their record closing price. Microsoft has found strong gains during the coronavirus pandemic, as companies rely on cloud computing from Azure and cloud software offerings like Teams to keep employees connected while they work from home. Sales in the cloud and personal computer segments led the way in Tuesday's report, easily beating expectations as demand for PCs and remote computing power continued through the end of 2020. In the holiday quarter, Microsoft reported earnings of $15,460 million, or $2.03 a share, on sales of $43,100 million, strong growth from the same quarter a year ago, when Microsoft reported earnings of $1.51 a share on sales of $36.9 billion. Analysts on average expected Microsoft to report fiscal second quarter earnings of $1.64 a share on revenue of $40.23 billion. Shares jumped 4% in after-hours trading following the announcement, after the stock established a new all-time closing high of $232.33 in the regular session, topping a previous record from September 2020. Microsoft stock has increased 40.8% in the past 12 months, as the Dow Jones Industrial Average, which counts Microsoft as a component, has increased 6.8%. The product that has most excited investors and analysts in recent years has been Azure, Microsoft's cloud computing rival to Amazon.com Inc.'s Amazon Web Services. The company said Tuesday that Azure grew 50% in the second quarter. Microsoft does not provide actual financial performance of Azure even as rivals such as Amazon and Alphabet Inc. break out the performance of their cloud computing offerings, and that sales in its Intelligent Cloud segment grew to $14.6 billion from $11.8 billion a year ago. Analysts on average expected cloud revenue of $13.7 billion, according to FactSet. This is a shot across the bow at Amazon and Bezos. They're gaining more and more shares versus Amazon Web Services, Wedbush analyst Dan Ives told MarketWatch in a brief interview after the numbers hit Tuesday. A year from now, this could start to be a head-to-head battle. Ives said that even those bullish on Microsoft weren't expecting Azure to grow by 50%. Azure growth had been slowing steadily, and Microsoft reported growth of 48% and 47% in the two previous quarters. Ives said expectations were closer to 44% to 45%. Microsoft is firing on all cylinders and these numbers start to drive the stock to a $2 trillion market cap, Ives said. As personal computer sales spiked due to work-from-home needs and Microsoft began selling new Xbox consoles in the holiday season, sales in Microsoft's more personal computing segment grew to $15.1 billion from $13.2 billion in the same quarter a year ago. Analysts on average expected segment sales of $13,470 million. Microsoft said that revenue from Xbox grew 40% in the quarter, while sales of its Surface lines of PCs increased 3%. Microsoft's Productivity and Business Services division, which includes cloud software assets such as its Office suite as well as LinkedIn and other properties, reported revenue of $13,350 million, up from $11,830 million a year ago. Analysts on average expected sales of $12,890 million. For the fiscal third quarter, Microsoft projected sales topping $40 billion yet again, with guidance for $40,350 million to $41,250 million. Analysts on average were projecting revenue of $38,740 million ahead of the report. The 31 analysts offering 12-month price forecasts for Microsoft Corp have a median target of $250, with a high estimate of $285 and a low estimate of $220. The median estimate represents a plus 7.49% increase from the last price of $232.58. Thanks for watching. If you liked this video, hit the subscribe button to receive more like it in the future.